Oh boy, so let's just talk about how I panicked and lost 6 grand in 4 trading days. Now, for some people, it may not sound like a lot of money. For other people, it might be a lot of money. But for me, this was more of a psychological loss more than anything. For anybody who saw one of my previous videos, how I lost 100 grand in the stock market, I had started investing in the late 90s during the tech boom and turned 20 grand into 140 grand, and then the market crashed in March of 2000, and I panicked. I literally sold probably near the bottom of the tech crash and ended up losing 100 grand of that money. And what happened was I just decided to stay out of the market. I just didn't want to have anything to do with the stock market after the crash. But what I did was I spent the next 3 years researching. I just learned about. I started reading like a lot of Seeking Alpha articles. I read a couple of books on advertising. I started researching about charts and everything. And in that 3 years of research, I concluded that it is extremely, extremely hard to beat the stock market. So I'm just going to invest in the S&P 500 and know that over the long term, I'm just going to beat 95% of people that are in the market. So that was my master plan. Now, one of the mistakes I had made in the 3 years of doing research was that there are a couple different ways to sort of mirror the S&P 500. One, the best way is the Vanguard Low Cost Index Fund. Another way is the SPY. And I thought to myself, okay, the Vanguard, you have to open a fund. It feels more complicated than the SPY, and the SPY just seems as simple as buying and selling the stock. That was kind of a mistake, and I'll explain why that is later. So in the 3 years that I was researching and not investing, I had a pretty good paying job in advertising. I was able to save up my money, so I actually saved up about $100,000. And when I saved up that money on top of the $20,000 I had left over from my previous portfolio, I had about $120,000. I was ready late 2003 to go back into the market using the SPY that basically mirrors the S&P 500 stock. I'll just do that, relax. Okay, so here we go. Late 2003, put my money in. The first day my money in the stock market doesn't do much. The next day, boom, the market just tanks. It tanks like almost 2%, and I lost like 2,200 bucks. And I was like, oh no, I'm going through this again. Like the market, I stay out of the market just long enough for it to crash again or whatever. The next day, the market was down again. It was down another 1.5%. So I was down about $4,400. And I thought at this point, I can't win. Like I was convinced that the stock market was a scam, and I shouldn't even be investing in the first place. But I was thinking logically, the S&P 500 is going up on average 9 to 10% a year, and I'm losing this money. I was not. I was just rattled. And then finally, the next day, the market recovered a little bit, so I was kind of feeling okay. But then the day after that, I believe it was on a Friday, and then the next Monday, I still held on to the position, and the market opened down like a percent, 1.25%. I was down $6,000. I hit the eject button, got out of the SPY. I was down $6,000, and I was just apoplectic. I was really, really upset with myself that I felt like, okay, I researched 3 years so I can lose 6 grand in 4 trading days. And, what I've really learned is that one, for your long-term investments, you want to put it in something that's not easy to get out of that trade. If you're going to be in this for 10 to 20 years, you put in a low-cost index fund, you're not likely to jump out as easily as you have an ETF or individual stock. So from going forward, I put the majority of my money in a low-cost Vanguard index fund. I don't look at the price, so I don't get shaken out, because I know my time frame are decades, not days. And that $6,000 that I lost, I consider that a tuition, just a tuition fee in the School of Investing. And I'm proud to say I haven't been shaken out of a trade like that since, in the 15 years since. So I'm very proud of myself for that. But what I wanted to show you, the lesson of this video, is that for your long-term investment, put it into something that's kind of hard to get out of that trade, and keep your time frame in decades or years, not days, because in days the market can do anything it wants to do, but in the long term it recovers. In fact, I'll probably do a video on this later. the largest gains are made in the stock market days after the biggest declines in the market. When the market does this, it will do this. Literally kind of like a V-shaped motion. So I hope you enjoyed this video and learned from it. If you like it, please be sure to like, share, and subscribe. Okay? Thank you. Bye.